Recording started.
Okay. Okay. Good morning. Ranks are thinning here. We're going to have to do pop quizzes more often. Okay. So today we're going to start Chapter 3. Most of you, some have done the Chapter 3 lectures. I can see that. Others have not, and that's fine. So what our plan is today is we're going to scratch the surface of Chapter 3. We're going to kind of get an overview. Most of what we do today is not on the homework till next week. There can be some stuff we do today, obviously, that's on the attendance quiz. So this might relate to next week's homework. And so we're going to do that. And then after that, after we go through a couple homework problems, not too bad, to do a little tiny bit of lecture to get us kind of used to what Chapter 3 is about. Chapter 3 is a huge chapter in terms of importance, and it's fairly lengthy as well. So that's why we're taking today and next week to do Chapter 3. So after we do this introduction to Chapter 3 and a couple homework problems, then Brian's going to talk about accounting as a profession in the Ohio Society of CPAs, and I'll leave that to him. And then after he's done, I'm going to talk about the exam. The exam's coming up not next week, but the following week. It starts September 30th. So it's something I want on your radar now. There's information on Blackboard, but we are going to talk about it today in a general sense. So then you can think about, if you have questions, we can talk about that next week. Okay, with that then, okay. So just talking about what's due, I've got this slide a couple times today just to reiterate what's due. We have an attendance quiz due Saturday, which covers class, not those 2 days, covers class 916 and 918. And the video quiz covers Chapter 3 and the Chapter 4 homework. Okay. Just a reminder, that debit credit handout that has a lot of things on it that can be very useful to you. So just as a reminder, that is available. I posted it on Blackboard. Okay, so now we're going to start the Chapter 3. This is the little bitty lecture, and this is my artwork. And so we have this little example that we're going to walk through. Very, very simplistic, but this chapter is about the difference between cash basis accounting and accrual basis accounting. 99% of accounting is done on an accrual basis, but as individuals, we use cash basis accounting, so it's kind of hard to get used to that idea to begin with. So I've made up this little example, and very, very simplistic, but I think it'll show the difference, and then we'll do a couple homework problems, and you'll watch the lectures over the weekend, and we'll come and do more next week. So let's say we have a lawn care business. Okay, so we're doing this from the business standpoint. So this guy has a lawn care business, and he mows lawns. And in May, a customer comes and says, I want to pay for the summer of mowing. So the customer pays $600 to the lawn guy and says, here's $600, and that covers mowing in June, July, and August. Okay, so then in June, so the lawnmower guy gets $600 in May, because this is important what months these happen. In June, the lawnmower guy rents a mower for $50 for the month and does the mowing. Okay. In July, the lawnmower guy pays $50 for lawn mowing rental and mows lawns. And in August, he pays $50 for lawn mowing and mows lawns. Okay, so we have 4 months. We have the money being paid in May, and then we have June, July, and August where he's paying $50 for each month of lawn mowing renting. Okay, so those are the basic steps, okay, the basic facts of the situation. So now we're going to start with cash basis accounting, which is what we're all familiar with. As individuals, 99% or more of us use the cash basis accounting doing our taxes, so that's what we're most familiar with. So on a cash basis, we have in May, we're going to show $600 of revenue, okay, because he got $600 of revenue in May. In June, he's got a $50 expense In July, we have $50 of expense. And August, there's $50 of expense. Okay? So cash basis accounting, you are tracking the cash. The only thing you do in cash basis accounting, the only time you make any entries at all, is when there's cash involved. So these are the activities. So what we're going to see here is in May, he will have net income of $600. Okay? So he's going to show that he earned $600 in May. In June, he has a loss of $50 because he paid the rental for $50. In July, he has a net loss of $50. And in August, he has a net loss of $50. Okay? So this is cash basis. But when we think about what happened here, if we're trying to reflect the economic reality, in May, did he do anything to earn that $600? No. He just collected money. I mean, you could say, well, he made the sale, but he collected the money. Actually, in May, when he collects that money, is that money his? No. What if he never mows the lawn? What does he do? He has to pay it back, right? So that money that he collects in May is actually a liability, right? Okay? But under cash basis accounting, the only time we do entries is when cash is involved. So at this point, this is cash basis. Cash basis, the only time we make an entry is if cash is involved. So that's what's going to be our income statement. Each of these months is going to look like that. Now, as an investor, okay, so this is very simplistic, but if we were to do this on a large scale for our business, as an investor, I'd look at May's statement and go, wow, we're doing great. Everything's awesome. And then June, July, and August, when he's actually doing the work and being productive, we're going to say, he did terrible. So cash basis accounting is not acceptable for businesses. Very few businesses are allowed to use cash basis accounting. They have to use accrual basis accounting. So this chapter is about, wait a minute, cash basis accounting has a lot of shortfalls in that it doesn't reflect what's actually going on. It's just tracking the cash. We're not saying, I mean, this is great if we want to know how much cash we have, but that's usually we need to know more than that. Okay, so now accrual accounting. So same set of facts, but we're going to talk about what happens under accrual basis accounting. So same example, but now we're going to report under accrual accounting. Now accrual accounting wants to track when things actually happen, the economic reality. So what's going to happen under accrual accounting is we're going to take that $600 revenue and it's going to be spread over June, July, and August. So that $600 back up in May that we collected, that's actually, and this is kind of important, and you're going to see questions on this throughout. That $600 we collected back in May, that goes into an account called unearned service revenue. And the reason that that is important is because it's one of the accounts that doesn't sound like what kind of account it is. Unearned service revenue. What kind of account do you think that is? No, unearned service revenue is we're the Mo guy, okay, and we've collected the $600. What in May? He hasn't done anything. What? Who owns that $600 in May? Yeah. So what is it to the Mo guy that's holding it? Liability. Okay, it's a liability because he hasn't performed any service. He has a legal obligation to perform those services or return the money. You can't just collect money and not do anything for it. So that $600 revenue in May, under accrual accounting, it goes into an account. It's not revenue in May. It goes into an account called unearned service revenue. Unearned service revenue is a liability account. So it's one of the few times that you can't look at the account name and go, oh, that's a revenue account. Okay? Unearned service revenue is a liability. It says that we still have to perform services. When you buy tickets for an event at Ticketmaster and your concert is in 2 months, Ticketmaster has unearned service revenue until the performance goes on, okay? At the time that they deliver the concert happens, you attend the concert, that's when Ticketmaster earns the revenue. They don't earn the revenue when they sell you the ticket. They have a legal obligation up until they deliver the concert. So this is unearned service revenue, which is a liability under accrual accounting. So that $600 that I've got revenue on it, it's not revenue under accrual accounting, it's unearned service revenue, a liability, but that becomes revenue as we earn it. So as he mows in June, at the end of June, he recognizes a third of that. We're just going to make the number simple. So he gets a third of it in June as revenue because he actually did the service. He has $200 revenue in July, and he'll have $200 revenue in August. And that, from just looking at it, going, yeah, that makes sense. He's mowing lawns June, July, and August, so now we're going to recognize revenue in each of those months. So he has no revenue in May, he has a liability, and then he works that liability off over June, July, and August. Okay, so in each of those months, he has $200 revenue. We'll subtract the expense in each of those months, the $50 rental. And what we get then is he has net income in each of those months of $150, which makes sense. He's earning the revenue, he's mowing, he's got the expense, and now we've got steady income over June, July, and August. He's performing the same service every month. He has the same expense every month, so it feels like it makes more economic sense to report like this, to say, well, this is actually what happened. This is actually how much revenue I earned. This is how much expense I had, and now it makes it look more steady. Yes?
$600 in revenue.
No. In May, okay, that's not what we called revenue before.
Okay.
$600 a liability. That's unearned service revenue.
Okay, so that's what he...
The guy paid him $600 to mow his lawn for the summer.
Okay.
Okay, so that's a liability because he hasn't earned it in May. He just has the money.
Right.
Okay, he says, to get on my schedule, you have to pay me ahead of time.
Okay.
Okay, so he has the $600 in May.
Okay.
So then he mows the lawn in June, and this contract is for June, July, and August. So he mows the lawn in June, he's earned a third of it.
Right.
Okay?
Okay, so each month.
Yeah.
Each month he's earning $200.
Yeah.
Okay.
Yeah, because he doesn't, like, if the contract would, if he'd quit performing service at the end of June, he would only owe $400,
right.
You know, because he's done some of the service.
Right.
Yeah. So you can recognize revenue when you earn it, as you earn it. You don't have to wait till you're all done, but when you earn it, okay? And just, he could also, this situation, that $600 prepay, we could also do it the other way, and we could say, I'll mow your lawn all summer, and you can pay me in September. So instead of the customer paying in May, the lawnmower guy could say, well, I'll mow your lawn June, July, and August, and you pay me the $600 in September. So he's still going to earn $200 in June, $200 in July, and $200 in August, but now he has a receivable building up to September when he pays it. The 50 expense was in the facts where we just said he's renting a mower every month. Yeah. So the $50 he's just paying every month. Okay. Okay, so $150 net income in June, $150 in July, $150 in August. Okay? And we have zero income in May. Okay, that's not revenue in May, that's unearned service revenue, which is a liability. So he has zero income in May, which makes sense. He didn't do anything in May. He performed the services in June, July, and August. Okay, so just comparing those two scenarios. Under cash basis accounting, that's the left column, May we had $600 of revenue, net income. June, July, and August we showed a loss each month. And under accrual accounting, we had 0 net income in May, but we show the 150 of net income in June, July, and August. Now, if we add our income up for the 4 months, it's going to be exactly the same under May and under cash basis accounting and under accrual accounting. The difference between cash basis and accounting and accrual accounting is simply timing, when we recognize stuff. We're going to ultimately recognize it all over the long run, but cash basis accounting can be very, very misleading to investors. And this is very simplistic. You could say, well, this is all in the same year, but I was just trying to use an example that you can see where if you start talking about years, this can be really, really misleading. Under generally accepted accounting principles, you can't use cash basis accounting. Okay? So you're going to have to use accrual accounting. So the rest of this chapter, what we see in this chapter is this idea of how do we do accrual accounting and how do we do compare that to cash basis. So the rest of this course is essentially accrual accounting because that's the only thing acceptable for businesses to use. Okay, so here's the question. True or false? Unearned service revenue is a revenue account. We don't have homes now. So what do you think, Blake? False. I'm not able to check anyone on this one, right? Okay, Brian, what do you have on this one? 39 falses. Any? No truths? 4 truths. There we go. Okay. So unearned service revenue is not a revenue account. So that was false. Unearned service revenue is a liability. And you will see that question again in some form or another. It's just so key. It's one of the few accounts that isn't what it looks like. So just because it says revenue, it is, when you see unearned blank revenue, or unearned revenue, unearned sales revenue, unearned whatever revenue, when it says unearned, that means it's a liability. Okay, so this is the first of 2 exercises. Today, not a lot, these aren't bad, these are identifying numbers. So I know you haven't read the chapter yet, more than likely. So we're going to walk through these. Basically, in exercise 3.1, we're given a lot of information, okay, about their sales and how much cash they collected and cost of goods sold, that kind. So we have 2 questions to answer. First of all, what was their net income for 2012, and how much was their cash balance? Okay, so those are 2 very different questions. Net income, we're looking at how much revenue and how much expenses they recognize. Now, the principle behind this, back to the lawn mowing guy, we recognize revenue when we earn it. Okay, not necessarily when we get the cash. We recognize expenses when we incur them, not when we pay for them. Those can be 2 different things. If I incur utility expense in December, so I use my electric all month, right? When I do my financial statements for December, I'm going to include utilities expense even though I don't have to pay Ohio Edison until January. So we look at recognizing expenses when we incur them, not when we pay them. We recognize revenue when we earn it, not when we get paid. We can get paid ahead of time. We can get paid afterwards. So those are our 2 golden rules. So we're going to calculate net income. And then question B talks about, well, let's track our cash. So let's just start with this first one. Net income for 2012. Whenever a question asks me, what's net income? The first thing I do in my mind is say, well, how do I calculate net income? Don't let the numbers confuse you before you get started. I tend to be a very visual person, so I want to write down that formula I have, because then I can fill in some numbers and at least get fairly close. So net income, basic formula for net income is revenues minus expenses equals net income. So now we need to go through the problem and look for earned revenues and incurred expenses. So first sentence says we made sales of $850 million during okay, I made sales of $850 million. So if we make a sale, that's earned revenue. Okay? So that 850, it tells me I made the sale. Okay, now the next sentence, of this amount, Western collected cash for all but $27 million. Okay, collecting cash. That's important when we do B, when it says calculate how much cash we have, but collecting cash has nothing to do with revenue earning or expenses, okay? So if it says cash, usually we can put it to the side, and we'll answer the other question with that. So continuing, the company's cost of goods sold was $290 million. Okay, cost of goods sold is one of the few other accounts that's kind of hiding what kind of account it is. Cost of goods sold is an expense account. It's one of the rare expense accounts that doesn't have the word expense in it. Cost of goods sold is on every manufacturer's income statement. It's on retailers. They have cost of goods sold on there too. So cost of goods sold is an expense. And so it tells us our cost of goods sold expense was $290 million, and all other expenses were $325 million. Okay, so even though our formula says revenues minus expenses, those expenses could be more than one. We're not just looking for one. So what we're going to have here is our cost of goods sold. We're going to subtract it, because remember, they're not asking us to prepare an income statement. They're asking us how much their net income was. So I'm just using a running total. So I have that sales revenue of $850. I have cost of goods sold of $290. This is not a financial statement, so I'm just putting brackets around to remind myself later that I'm going to subtract it. And then all other expenses, $325 million. Notice, too, that the problem says million. So every one of those numbers has 6 zeros after it, but the problem is already in there. We don't add 6 zeros, or then we're talking billions or whatever, trillions. Okay, so then my next step is to take the sales minus those expenses, those two expenses, and I get net income of $235. So I have answered part A. That's all we're doing. We're looking for the sales we made and the expenses we incurred, not the expenses we paid. Paid implies that cash is changing hands. Okay, so part A, that's A. We're looking for net income, that's sales, revenues, minus expenses. Sales and revenues kind of are interchangeable, but sales revenues minus expenses gives us net income. Now we're going to move on to part B. How much was their cash balance? So cash balance says, when we're looking for a cash balance, to find out what I have at the end of the year, I basically start with what I had at the beginning of the year, add with the cash that I collected, subtract the cash I spent, and that's going to give me what I ended up. Just like if you were calculating how much you had. You would start with what you started with, add what you got in, subtract what you paid out. So going on to part B. Okay, and that's what I'm saying. So if we want to put it in formula form, we can, but it does make sense that my ending cash is going to be my beginning cash, add what I collected, okay, subtract what I paid out, and that's going to give me this ending cash. Okay, so now as we go through the problem, we can look for those numbers. So our sales revenue is not in that equation. We're not looking for sales revenue. We're not looking for expenses. We will go back up and collect cash in just a minute. But let's look for our beginning cash balance. Our beginning cash balance, 75. Oops, I went too far. Okay, 75. Okay, beginning cash is 75. So then my next is I want to add my collected. Now, this is a case where often in real life too, the number's not given to us. It doesn't say we collected cash. We didn't collect this amount. What it does is it tells us of the sales of $850 million, Western collected cash for all but $27 million. So to get the cash collected, we need to take the $850 million sales, subtract that 27. So they're just making us work for that number a little bit. So we're going to take that $850 million of sales, subtract the 27. So they're telling us they collected cash for all of that except for $27 million. So that's why we're subtracting that out. So we're taking our beginning cash, we're adding our collections, and next up in our formula is payments. Now payments, it doesn't necessarily say, here's the cash we paid. Sometimes it will. But that word paid implies cash. So when we read through this, it tells us our cost of goods sold was this and our other expenses totaled that. Those aren't paid. We're not saying we paid those. We're saying those are what our expenses were. But it tells us during 2012, Western paid $380 million for inventory and $255 million for everything else. So that's the cash that we paid. So we're going to subtract payments for inventory and payments for everything else. So then the only thing left to do here is to calculate our ending cash. So we're going to add that beginning cash, add our collections, subtract our payments. And so a lot of this is just getting used to the terminology and being able to read. If you read a company's financial statements and they talk in the beginning discussion about we had expenses of this, that means that's their actual expense. That's not saying how much they paid cash for it. So cash is very different from our revenues and our expenses. They're different because businesses sell on credit, businesses get paid ahead of time, businesses get paid later. So those two numbers are very different. But this is exercise 3.1. It's not bad. It's just going through and identifying the numbers that they're asking for. Okay? So that's the difference between looking for net income and looking for cash. Net income is not our ending cash balance. Cash is just one asset of many assets that we have. Okay, a question. An expense incurred in 2011. Okay, so think electric bill. Sometimes that helps to think. So we used electricity in 2011, but we don't pay it till 2012. Using the accrual basis of accounting, this expense should appear on where? The 2011 income statement, the 2012 income statement, neither the 2011 nor the 2012 income statement, or both income statements. So if you want to think about your electric bill, you incur the expense in 2011, you don't actually pay it till 2012. When is that expense going to appear on the income statement under accrual accounting? Do you have a lot in already, Brian? Okay. Okay. Okay, for this question, an expense incurred in 2011 is not paid until 2012. The answer is 2011, okay? Because we record expenses when they're incurred, not when they're paid. Paid is going to be our cash we're going to recognize. We'll recognize the cash, but that's not when we actually spent the cash. Think back to our lawnmower guy. we're recognizing the revenue as we earn it, not when we got the cash. So you have to kind of divorce the cash side from the actual economic event. 18 said B out of how many? Okay, so do note, where? Right behind me. Okay, you're too close.
Why wouldn't you?
You do put the expense in accounts payable, but what's the other side? Okay, so let's go back, let's walk through this. Okay, so our electric bill, you're on the right track, you're halfway there. Okay, so in 2011, we have an electric bill, we use electricity, so let's say the bill is for $100, okay? But we don't get the bill, but we know it's going to be, because we use electric all month. Okay, so in 2011, we're going to do an entry, we're going to write an entry, we're going to debit utility expense, and we're going to credit accounts payable. So that's exactly where you work. So we're recognizing the expense in 2011 because we've got utility expense. Yeah. So then when we pay this in 2012, we're going to be debiting accounts payable to get rid of our liability because we paid it off, and we're going to credit cash when we actually pay that. That's in 2012. So in 2011, we've got expense increasing and liabilities increasing. In 2012, we decrease cash and we decrease liabilities. So this transaction impacts 2 years. So that makes sense? Okay, so a lot of this is just carefully combing through. Every example is going to be different. They're not going to be boilerplate, so you have to think about the economic reality underlying each transaction. Okay, so let's do another exercise. Exercise 320A. Okay, we have earned revenues of $530,000 on account. They collected $540,000. Expenses totaled $440,000, and cash payments were $420,000. Okay, so they're asking us what it would report on its 2012 income statement under cash and under accrual. So what we've got here going is the company is in business, so they were in business in 2011, they were in business 2012, and they're in business in 2013. So these transactions can impact multiple years. So what they're saying is, let's pretend the company uses cash basis accounting. Cash basis accounting, the only time you recognize revenue or expense is when you pay the cash. So we're going to go number by number here. So for cash basis accounting, revenues. So under cash basis accounting, we say revenue is only revenue when we get the cash. So under cash basis, what would our revenues be? You're right here, you're so convenient. That means you are only recognizing cash collections as your revenue.
Okay. 5.
Yes, it would be $540,000. Okay. Okay. So $540,000. Cash basis is the easiest thing. The only things you write entries for are cash. So cash either goes up, and if it goes up, it's revenue. If it's expense in this case, it's going down. So, okay, so cash basis. Now, okay, so let's go here. So now, next number down, expenses. Expenses, what do you do for cash basis? What number? Now, cash basis is your cash payments, right? Okay? So cash basis, you're going to show $420,000, right? So it says cash payments. Okay? So under a cash basis, you are just simply going for the cash, saying, here's the cash I collected, here's the cash I paid. So my net income under cash basis is $120,000. Okay, now, next part then, part B, accrual basis. So accrual basis, we're going for what we earned. So during 2012, the first sentence says they earned revenues of $530,000. So accrual basis accounting, we are going to recognize that $530,000 as our revenues. Now, expenses are the expenses we incurred. So when it says expenses totaled $440,000 and related cash payments for $420,000, under an accrual basis accounting, you're going to do the total expenses. So watch, the language is very subtle differences, and you have to think about what's happening. If it says we paid it, it's cash, so it's not that number. So in this case, we had two numbers to pick from. We have expenses totaling $440,000 and related cash payments for $420,000. It doesn't say our expenses were, it says our expenses totaled. So we go with that. We know it's not the cash payments, because cash payments does not equal expense under accrual basis. So then your net income under an accrual basis is going to be $90,000. So a lot of this is practicing and reading and being able to sift through what actually expenses were incurred, what revenue was earned. Cash basis, usually it's easy to rule out what the cash payments are and go for the other numbers. Now, which basis measures net income better? It's going to be the accrual basis accounting, because accrual basis actually goes for when we earned revenue and when we incurred expenses, not when we actually paid the cash, which can be very, very different. Okay, what? Got a little click happy there. Okay, if a company fails to record a sale on account. Okay, so to do this question, I wouldn't even look at the answers. I would, first of all, this sentence where it says, if a company fails to record a sale on account, how I would do this is I would say, okay, what's the journal entry for a sale on account? Okay, so I would write this down, like right now. So, sale on account, journal entry. What's one side of that journal entry? I'm going to put you on the spot here. We'll work it through. Okay, so I make a sale on account. Okay, so I sell something. So what's one side of that? Accounts receivable, correct? Everybody agree with that? So, accounts receivable, is it going to increase or decrease? Increase. And what kind of account is accounts receivable? Asset, liability, asset, yes. So to increase an asset, we do what to it? Debit it. And we know that because we have that debit credit handout handy when we're working on these things. So we're going to debit accounts receivable. Now, do you know what your credit will be? You do know this. It's a sales revenue. Yes, good. Okay, so sales revenue is going to be credited. That's an equity account, revenue account, and to increase the revenue account, we credit it. So, okay, so right now, if you've been following along, you have a journal entry debiting accounts receivable and crediting sales revenue, right? So this question, so I haven't even looked at the answers. Now the question says, if I don't record the sale on account. So this says, I make this sale, but I don't record it. So what's going to happen? So if I don't make this journal entry, I'm going to be missing a debit to an asset. Which, right? A debit to an asset increases assets. So I'm not going to have. I'm going to have assets too little. Would you agree so far? If I don't make it, I don't have that increase to my assets. So I'm going to have assets understated, and then I'm not going to have that credit to sales revenue. I'm not going to have that increase in sales revenue, also increase in equity. So now, if we look through what we will have. Assets on the balance sheet is the only answer that fits with that scenario, okay? So when you get these kinds of questions, don't let the answers confuse you. Start with the top and say, I know I can do this entry. This is what they're asking me. If this entry doesn't exist, if I don't have that accounts receivable debit and that sales revenue credit, what does that impact does that have? So then you can run through these things and you can see that the only answer that fits that scenario is B, assets on the balance sheet will be understated. Okay, so we've got two things left to do today. Don't put away your paper because you're going to need it in a minute. Okay, so we're going to start with Brian. Brian is going to, if you're physically in class, he's handing out his business cards. He represents the Ohio Society of CPAs, okay? If you're an accounting student, you get well, I'm not going to steal your presentation. Okay, so I'm going to let Brian talk about Ohio Society. But he's going to be talking about accounting as a profession. He's also handing out a brochure. If you're online, he can email you the information you would need to email him. So I'm going to let him talk. I'm going to switch over to your presentation. So here's your microphone.
Okay, right.
Okay, I'm going to take care of it.
Okay, sounds good. Well, first of all, in class I'm passing out my business card. If you want one, take it. If not, I mean, I don't have a million of these things, so give them back. And the student affiliate forms, there's a brochure. It's got some information in there, but if you want to fill out that little slip to become a student affiliate, there's scholarship opportunities that are available if you're a member, and then the Ohio Society of CPAs will send you information about what, current issues in the accounting profession and stuff like that. So if you want to fill that out, get it filled out by the end of class or bring it to class. I don't care. Just give it to me whenever you can if you want to fill it out. So if you are online and you want to fill one of these out, or you want my business card or whatever, you probably don't need it. My email is on this slide. It's bhaws7@kent.edu. If you have any questions about the accounting profession, the CPA exam, anything, just let me know. I'd be more than happy to help. If you want one of these student affiliate forms, just email me and I'll try to get you some. I only have a limited amount of those because they don't, send me a ton of them. Cool. I get a clicker too. So, cool. We're about to go. Oh yeah, this is cool. Okay, so a little bit of background about me. I went to Jackson High School, which is about 30 minutes south of here. Some of you might know. And I graduated in 2009. During high school, I went to Kent State Stark for post-secondary, which was really cool, and I thought, it really helped. It gave me a semester less classes than I had to pay for. And then after high school, I went to Kent State Stark for 2 years. I decided to major in accounting, so after 2 years down there, you can't take any more accounting classes, so I came up here and decided I would keep going with my major. I graduated last December with my undergraduate degree, and then I had my internship with CUNY and Pinnicky. That lasted during the spring and summer, so I got done with that at the end of June. And then in July, in August, I went with Beta Alpha Psi to Anaheim, which is really cool. And I'll talk about Beta Alpha Psi maybe in a minute. Actually, I already did, so I'm not going to talk about that again. And then now I'm a graduate student. I'm taking my MSA right now, and I'll graduate in May. And then hopefully I'll pass my CPA exam next summer, and then I'll start with CUNY and Pinnicky next September. So I've got all my crap figured out, so I'm pretty happy. So that's a little bit of background. Cool. So most people don't know exactly what it is accountants do. they all think that we just sit around and, in our little cubicles and not talk to anybody. It's really not like that at all. Here's a list of jobs that you can do if you're an accountant. Auditing is basically you'd be looking at a company's financial statements or, all their books and like combing through it and making sure that their financial statements are reasonably accurate. That's what I did. It was pretty fun. I enjoyed it. Tax would be, going through people's tax returns or, individuals' tax returns, corporations, and you'd be trying to minimize their tax liability. You'll learn more about that when you go through your tax classes. I like tax, it's fun, but I didn't go into practice it. You could also go into corporate accounting. You could be a staff accountant. Basically, what you'd be doing is working with companies' books. You'd be working as a team with other people, because you're not going to be doing every account. You might be doing accounts receivable or accounts payable, but all of those books will come into creating the financial statements. So that's a lot about what this class is about, journal entries and stuff like that. Your next class, if you choose, I think you have to do managerial. If you're a business major, you have to do managerial. So then you'll be studying like managerial accounting, which would be like cost accounting, efficiencies, and internal controls, more internal controls than financial. Internal audit would be like making sure that the internal controls are all working, making sure that the books are reasonably accurate, and that kind of helps the external auditors too if you've got a decent internal audit department. You could also have a job in government. There's governmental audit, which is basically, auditing governments such as cities, counties. I did a couple port authorities while I was with Cheney and Pinnicky, so it was pretty cool. I got to audit the Port Authority, and their office is in Cleveland, and you can see, the Cleveland Port Authority. You can see the Brown Stadium from their office, which is pretty cool. Actually, I think they moved now, though, which is unfortunate, but that was a pretty cool view. And then you got to look over Lake Erie. It was really cool. There's also a lot of opportunities for the FBI. I wouldn't say a ton of opportunities. They don't have a ton of special agents, but they are heavily recruiting from the accounting profession because it's easier to train accountants to be special agents than it is to train special agents to be accountants. So they really value our knowledge. So there's a lot of requirements you have to get in the FBI, but it's definitely, if you're interested, it's an avenue worth pursuing. Okay. Good. So this slide's just about the employment trends, and basically it's saying that accounting is on the up and up. There was always going to be need for accounting jobs. So if you ever you're not going to be wanting for accounting jobs, especially if you become a CPA. Like they said, 90% of accounting firms are hiring in 2011. It's a little out of date, but they haven't come out with new stuff yet. So, it's definitely a good, and there's opportunities globally. Lots of accounting firms I know, like the Big Four, even the top 5 or 6, they have international headquarters. Firms like Grant Thornton and E&Y, I think. I don't know if E&Y has their headquarters in England, but Grant Thornton's headquarters is in England. So there's a lot of different opportunities available. Here's some starting salary information for if you would go into public accounting. What I did was there's a whole booklet, and if you want a booklet about the starting salaries, I would be more than happy to give you a booklet. I've got a lot of them. But I took the entry level for a mid-level public accounting firm, and that's the lower end of this scale, and then the highest a higher level accounting firm, like a Big Four accounting firm, might pay one of their better candidates. So that's kind of the range for starting salary. So $45,000 a year coming right out of school is not too bad, I don't think. So, and then within 5 or 6 years, if you get your CPA, you could become a manager making between $80,000 and $120,000 a year. So It's really not too bad at all. Actually, it's pretty good. So, also corporate industry, you guys can see those numbers are definitely not bad. So, accounting is definitely a career that you can, make a life out of. Okay.
Yeah.
Oh. Yeah. Some helpful skills. I know all my professors now in the master's program are kind of pushing especially the good written communication skills and verbal communication skills. As an auditor, you're going to need to be emailing your clients, and as a staff accountant, you need to be able to, tell the auditors what you're doing. So, I mean, there's a lot of teamwork. There's a lot of interacting with people. You're going to be talking to people face to face. You need to be able to communicate your ideas effectively. Obviously, you need to have computer skills. Everything is going to technology, as you can see with this class. There's a lot of need for computers. Technical skills. Obviously, you should know how to do accounting if you're an accountant. Teamwork. There's a lot of teamwork, especially if you're like a staff accountant and auditor. We work in teams. You got to be able to work with people. It's not bad at all. I mean, if you're not a people person or a team person, it's not bad to work in teams in accounting. You just got to be able to put yourself up. Time management. You have to be able to work efficiently. No slacking off, but it's not strenuous. Leadership, you should always lead by example. Accounting is a field with high integrity, and you should always act as though you've got high integrity because you should have it. You also should be detail-oriented. Sometimes things should be, things are really nitpicky. If you make a small mistake, especially like in cost accounting, it could lead to a really big mistake on your company's part. So if you're going to do something like that, like cost accounting, you need to be very cool. Okay, so this is a little like roadmap, like how your college career could go, and kind of this is kind of like how it should go if you're really hoping to get your job and stuff. So your freshman year, which you guys are probably already sophomores, right? Yeah. Should choose your general direction, like choose, what's your major going to be, what are you going to kind of focus on, and you guys already went through all that. So, but get involved. If you're not getting involved, you should be already. Sophomore year, you should choose a major. Hopefully you chose accounting. If not, it's good anyway. You chose a business major. It's not a bad idea. Join an organization, whether it be Beta Alpha Psi or an organization that's specific to your major. Join the organization and get involved in it. That's the most important thing, is to get involved and start networking. Professionals of any career path would love to see you in a student organization. If you're interested in public accounting, you could seek a leadership program. I know Grant Thornton has a good leadership program. I just talked to them last night at Meet the Accountants Night, and I was like, hey guys, I keep like talking about you in your summer leadership program, even though I never did it. So I was like, free publicity, free advertising. But yeah, that's a really good leadership program, and that'll boost your resume a lot. Compose your resumes for internship interviews for the next year. It's a good idea to start early and kind of think about all that you've done already. Your junior year, you're going to try to get an internship in the second semester. That's kind of what we were doing last night with Meet the Accountants Night. Juniors are going through that process right now. So just think about it for next year. If you're an accounting major, you're going to be going through Meet the Accountants Night, internship interviews in the next couple weeks this time next year. So it's a very stressful situation, but it's so worth it once you get the internship and the possibility of a job offer in the future. So worth it. You should also be actively involved in the student organizations. Again, lots of those firms won't even consider you if you're not in student organizations. So it's a very good idea. And network. Go to their network. Can I take questions at the end? Your senior year, you're going to determine how you'll comply with the 150 credit hour rule. Basically, that means to take your CPA, you need 150 credit hours. And if you could do that, if you're taking just the Bachelor's of Accounting, and that's all you're doing, you're going to have 121 credit hours by the time you graduate. So what you can do is do the master's program, like I'm doing, which will get you your 150 hours, or you can do like a finance minor or marketing minor and get the 150 hours that way. The next slide, I think, will tell you that's how you can comply with this. Graduate programs, you want to do that, that's what I'm doing. I think it's a good idea, especially because it'll give you a lot of information that's going to be on the CPA exam. It's very, I like the program so far. It's kind of an advanced accounting role, and I love all my classes so far. You should also, if you haven't had a job yet, or if you don't have a job after your internship, you should apply for full-time positions at the beginning of your MSA program. So once you're done with that, you can have your job waiting for you. So this is the CPA exam. You need 150 semester hours, again, to qualify for taking it. You need your undergraduate degree, and you need 30 hours of accounting beyond the 2 classes here, so financial and managerial plus 24 more. And then you need 24 hours in business, which is not including accounting. So your finance classes, marketing, I think economics and statistics, those all factor in. So you don't need your graduate degree, but it's a good idea. So I think that's about it. Does anybody have any questions? I know you did. Do you have to be a traditional student? What do you mean by that? Yes, non-traditional students can still join. I know I don't live on campus. I might not be older, but yeah, we've got a lot of older members. So yeah, that'd be fine. Does anybody else have any questions? Feel free. Okay, cool. Well, is there any questions online? I think they're cool. Okay, fine. She's got it all. Again, if you have any questions, you can email me. Go to Beta Alpha Psi meetings. Yeah, tomorrow. Go to Beta Alpha Psi. Do it. All right. Thanks.
Okay, now my objective of what I'm doing today is just to kind of give you some high points of the exam. It is your responsibility to go through the exam information on Blackboard. I cannot take, plus you want to be able to make sure you absorb everything, and it also differs depending on which section you're in. So when you're on Blackboard, you will only see the information that's pertinent to you. So I've set it up so you'll see your information. So my disclaimer on just about every slide is this is not everything you need to know about the exam, but these are some questions I frequently get. So first one, our exam is Monday, September 30th, 9 a.m., and that already changed. They just opened the lab to start at 8 a.m. So those of you that are right here live, this might be a good time for you. So they start at 8 a.m. now. So you can take your exam at 8 a.m. Through Wednesday. So it's available Monday, Tuesday, and Wednesday. It starts at 8 a.m. on Monday. Can you make a note that I need to change? Later. Okay. So yeah, they just changed the lab hours yesterday to 8 a.m. Okay. So you can take the exam Monday, Tuesday, or Wednesday. It has to be completed by 9 p.m. on Wednesday. You have to start the exam by 8 p.m. So you cannot wait till 8:30 to take it. You've got to have it started by 8 p.m. That's a rule in the computer lab. If you are in sections 1 or 2, you will take the exam on the second floor of the College of Business. If you're in this room right now, it's the other end of the hall in the computer lab. 226 and 224. There's actually 2 rooms there, 2 labs, whichever ones they're running. It's open 8 a.m. That's an update, 8 a.m. to 9 p.m. Monday, Tuesday, and Wednesday. So you can take your exam. If you're in section 7 or 8, you have a lot more flexibility. You will be taking the exam on your own computer. You have a proctor. I've used this. I used this all summer. It works very well. I had students in various locations taking the exam. And the exciting thing about taking the exam, this would be how I would take it if I would be in those sections, just because you can take it anywhere from 8 a.m. Monday morning until Wednesday at 9 p.m. You're not going to have to wait in line. So you take it on your computer. If you're not comfortable with your computer equipment, the library has lots of computer equipment you can use. So you can just go to the library and use their equipment and take your exam. You need a webcam, and they have those over in the library. Okay, again, there's lots more information about that depending on your situation. In Blackboard, it'll have information about the way that you take it. Okay, so scheduling the exam. Again, I'm dealing with 2 different sections here. If you're going to take it in the computer lab, there's no appointment necessary. So you're like, oh, great, just take it whenever I want. Well, yeah, but if everyone decides to take it Wednesday afternoon, which is frequently the case, you wait in line. And you're going to be okay most of the time if you go in the morning. And so if you would go 8 a.m. or 9 a.m. or 10 a.m., usually pretty good there. You've got plenty of time. The peak times tend to be the afternoons. Keep in mind, we are not the only class taking exams in there. So the last day, that Wednesday afternoon, that's a really risky time to wait to take it. So that's the computer lab people. The people that are taking it at ProctorU, you can take it any time that you want, but you just need to make an appointment with them at least 72 hours in advance. And again, that information is on Blackboard. Everything you see here is on Blackboard. I'm just putting out some major points. So if you're taking it with ProctorU, you can take it any time within that time frame. You just need to make your appointment in advance. Okay. I keep adding more rules to this every year when people ask me questions. For your exam, you can have 1 sheet of paper. I never ever call it a cheat sheet because that just bothers me because it implies you're cheating and you're not. This is an exam reference sheet, so you can have 1 sheet of paper, 8.5 by 11 inches. Okay? If you don't know what size that is, use a ruler. You can do both sides. You can write it. You can type it. Again, all these things I'm telling you are questions I've gotten. So it can be any color of ink. You can use highlighting. You cannot use a magnifying glass. Yeah, you know. Okay, now, so this 1 sheet of paper, you can do whatever you want. It's yours, whatever you want to put on it. We're not policing it. Both sides of the paper. Now, when I say 1 sheet of paper, I mean 1 sheet of paper. 1 sheet of paper is not 2 pieces of paper taped together. It's not 2 pieces of paper with writing on one side each. It's not 2 pieces of paper stapled together. It is 1 physical sheet of paper. People will say, well, my printer doesn't print double-sided. Sure it does. Print the first page, get your paper, put it in the paper tray, and print page 2. Okay? So, yeah. Okay. Now, and I don't mean to be sarcastic, but I've gotten lots of questions. So I just want to make sure that we are all on the same page because I get these questions over and over. So 1 sheet of paper. Every semester, someone only gets to use half of their sheet of paper because they bring 2 in. So they will only allow you. It doesn't matter if you're taking it with ProctorU or in the computer lab, that rule is the same. Okay, the lab has scratch paper for you to use. The lab has calculators. So you do not use your own calculator. You do not bring your own scratch paper if you're in the lab. If you're using ProctorU, obviously they can't virtually give you paper, so you use your own scratch paper, but you have to show them it's blank. and you can use a plain calculator for the exam. So if you're taking it ProctorU, you cannot use the computer calculator. You have to have a plain one. You cannot use your phone because ProctorU is going to think you're doing something else with your phone. So you have to have some plain calculator. One of those calculators, a couple dollars, that's fine. Can't use a programmable one. And again, okay, that's it on that one. Okay, now, if you're taking it ProctorU, you can't use your phone. You can't have it visible. This, I'm talking about the people in the lab. There is a rule. If your phone is visible, you get a 0 on the exam. There is no messing around about this. If your phone is laying out on the table next to you, you will get a 0 on the exam, period. Okay, I don't care if you're using it. This is a lab rule. The lab workers do not kick you out. They don't say, you've got a phone there, get out. They'll just report it to me and tell me you had a phone sitting out. The lab is also recorded. There's cameras in it, just so you know. Do not have a phone out. I made it the entire year last year with no one having a phone visible in my class, which I thought was awesome. You do not want to get a 0 on the exam for such a stupid thing. So when you bring your phone, put it away. Put it in your pocket, put it in your bag, turn it off. That's an easy thing to comply with. Do not have it visible. If it's sitting on top of your bag and it's visible, it's a 0. So I cannot emphasize enough, get the phone. You can't have it anywhere visible. I mean, best case is to not bring it at all, but how realistic is that? I mean, you're going to bring your phone. Just make sure it's put away. You cannot use a phone for a calculator in the lab. They have calculators for you. Okay, now exam content. And again, we're going to talk about exam content more next week. But it's a mixture of multiple choice questions and exercises. It is in My Accounting Lab. You have to go to the lab because it has a password. If you click on the exam, it's going to, the reason it's asking you for a password is because you have to be in the lab. They have the password. I'm not going to email it to you. So how many of each multiple choice and how many exercises, that information is on Blackboard. I don't memorize that information, but I've recorded it. Generally, on average, most people take about 45 minutes on the first exam. You have a time limit of 2 hours. Okay, and it'll count your time down. Time doesn't stop for any reason. It just keeps going. But around 45 minutes, most people are going to be done after about 45 minutes. So you've got plenty of time. So it shouldn't be like rush, rush, rush. It's in My Accounting Lab. It covers chapters 1, 2, 3, and 4, everything we've done to date. Our exams in here, because I always get this question, the future exams are not cumulative, except that these principles we're learning about debits and credits and accrual accounting, they'll apply the whole semester, but we're not going to specifically go back and get questions from chapter 1 or 2. So chapters 1 through 4, there is a button in Study Plan in My Accounting Lab called Study Plan. You do not earn credit for it, so it doesn't impact your grade directly at all. But in Study Plan, every single exercise that's on your exam is included in Study Plan, and there's also a bunch of practice multiple choice questions. So when you're using Study Plan, that's kind of how the exam will be. When you have an exercise in Study Plan, though, you'll have the Help Me Solve This and Ask My Instructor. You do not have Help Me Solve This or Ask My Instructor on the exam. But the exam is virtually identical to when you have an exercise on the exam, it's going to look just like when you have it on homework. It's the same ones, just different numbers. So practicing Study Plan helps a lot. Okay, now these rules, I cannot emphasize enough, the need to watch the presentation, the little video I put together. I've also got it in writing on My Accounting Lab, or in Blackboard about the exam, and I cannot emphasize enough, please, please, please don't violate any of the rules. Just do your best on your own without any of these violations, because I made it through last year with no violations, so that was good, through last semester, not the whole year, but last semester. So do watch on that, and then we're to what to do. And again, that the attendance quiz covers class 916 and 918. The attendance quiz, like every week, the attendance quiz is available today starting around 5 p.m. Any questions? We have class next week, Chapter 3. I'll talk about the exam a little more then, but I want you to read the stuff online, watch the exam stuff, and then I can answer questions. We do not have class the week of the exam. Okay, so class is over now.